Hi there, in this video, we'll explain how Form IHT423 allows inheritance tax payments directly from the deceased's bank accounts.
Managing a bereaved estate is, quite frankly, one of the most stressful and administratively exhausting experiences a family can go through. And then, out of nowhere, you get hit with a massive inheritance tax bill. But here's the kicker. The very bank accounts you need to pay that bill are entirely frozen. If you're navigating this nightmare right now, take a deep breath. We at My Tax Accountant, or MTA for short, are here to alleviate that burden by untangling something called the IHT423 direct payment scheme.
So picture this. How exactly do you pay a £100,000 tax bill when the bank has completely frozen the deceased assets? It's the classic chicken and egg probate paradox that blindsides UK families and entrepreneurs every single year. You literally need the money to pay the tax, but you simply cannot get to the money until the tax is paid.
Hello, and welcome to this explainer. I'm a senior UK tax expert from My Tax Accountant. We are your trusted, professional firm for navigating all these complex estate tax issues. We completely understand the psychology, the immense pressures, and the incredibly strict rules when you're dealing with His Majesty's Revenue and Customs. Today, we're going to hand you the exact bureaucratic key that unlocks this frozen funds dilemma.
Here is our quick roadmap for today. We'll start with the probate tax trap, then explain the direct payment scheme, walk through a real-world case study, cover IHT 423 compliance step by step, look at alternative funding options, and finally discuss expert help and your next steps.
Right, let's dive into Section 1, the probate tax trap, involving frozen assets and deadlocks. This is the very first major hurdle executors face.
The core challenge here is a circular administrative deadlock governed by the Inheritance Tax Act of 1984. Basically, on one hand, you absolutely need a grant of probate, or confirmation if you're up in Scotland, to access and liquidate the deceased's assets. But the probate registry will flat out refuse to issue that grant until you have settled the inheritance tax liability with HMRC. Meanwhile, high street banks freeze sole accounts the absolute second they are notified of a death. So the assets are frozen solid, but the tax is still due. It's maddening, isn't it?
Now, did you know that inheritance tax generally must be paid within 6 months of the end of the month in which the death occurred? If you miss this strict HMRC deadline, things get expensive quickly. A highly punitive interest rate, currently sitting right around 8.5% per annum, begins to accrue daily on the unpaid tax. Because this rate is directly tied to the Bank of England base rate, just a few bureaucratic delays can strip away a family's inheritance before you know it.
Which brings us to Section 2, the direct payment scheme. Let's shift away from the frustration of frozen accounts and look at the actual solution. The HMRC Direct Payment Scheme is this brilliant arrangement between the government and most major UK banks, building societies, and investment providers. By using the official Form IHT423, executors can instruct a financial institution to transfer money directly from the deceased's frozen accounts straight to HMRC. It's a game changer because it completely bypasses the need for you to personally handle the funds, drain your own personal savings, or take out some incredibly expensive commercial bridging loan. Now here is a crucial professional tip from our team at MTA. Always apply for your IHT422 reference number at least 3 weeks before you intend to make the payment. Without this specific inheritance tax reference number from HMRC, your payment simply cannot be matched or processed by the bank or the government. Please, whatever you do, don't leave this step until the 11th hour.
When you actually look at the official IHT423 form, you'll see specific transfer details built right in. It clearly lists HMRC's centralized banking address over at Barclays Bank plc in London. When you submit this form, it acts as legal authorization. The bank verifies the account, checks the funds, and just wires the money directly to this HMRC account. The cash never touches your hands, which ensures total security and strict compliance.
Moving on to Section 3, a real-world case study on avoiding costly delays. Let's ground all this theory in reality with a highly relatable taxpayer situation.
Consider this scenario. We have an overwhelmed executor administering an estate where the standard £325,000 no-rate band has been fully utilized. The remaining estate generates a massive £150,000 inheritance tax liability. Now, there's actually plenty of liquid cash to cover this, but it is entirely frozen in a sole high street bank account. And, as is so often the case, the executor has absolutely zero personal liquidity to just pay a $150,000 bill out of pocket.
If this executor didn't know about the direct payment scheme and missed that 6-month deadline, the financial impact is genuinely shocking. Paying on time? 0 interest. But if they wait just 90 days late while trying to secure probate the old-fashioned way, the estate suddenly accrues £2,866 in late payment interest. That's nearly £3,000 literally lost from the beneficiaries, all because of a completely avoidable administrative delay.
To avoid burning that money, our executor took 3 precise compliance steps. Step 1. They requested that IHT422 payment reference number from HMRC well in advance. Step 2. They submitted the full inheritance tax account, which is Form IHT400, to HMRC to officially declare the estate's value. And Step 3. They completed Form IHT423 and sent it directly to the bank holding those frozen funds, instructing them to release the $150,000.
And the outcome? Absolutely seamless. The bank verified the form and transferred the $150,000 directly to HMRC. HMRC then issued the confirmation receipt, which allowed the probate registry to finally issue the grant of probate. Just like that, the deadlock was broken, the accruing interest was stopped dead in its tracks, and the executor was fully cleared to access the rest of the estate and distribute it to the family.
Let's look at Section 4, IHT423 Compliance Rules and Nuances. Making a mistake here can easily result in your forms getting rejected, setting you back weeks.
Understanding the strict requirements of these financial institutions is paramount. First off, you must submit a separate IHT423 form for every single bank account you wish to draw money from. Second, and this is a big one, joint accounts are totally exempt from this scheme. Under the legal principle of survivorship, joint accounts automatically pass to the surviving account holder, meaning they aren't frozen, so the bank won't release those funds to HMRC using this specific scheme. Third, always include a certified copy of the death certificate. And finally, send the completed form directly to the bank. Do not send it to HMRC.
Section 5. Alternative funding for cash-poor estates. The direct payment scheme is wonderful, but we have to acknowledge a very practical reality here. What on earth do you do if you are dealing with a property-rich but cash-poor estate?
If the liquid funds simply aren't sitting in a bank, you do have backup plans. For illiquid assets like land, buildings, or certain unlisted business shares, you can actually elect to use the 10-year installment option. This spreads the tax on those specific assets over a decade. However, keep in mind that the very first installment is still due at that 6-month mark, interest still accrues, and if you sell the property down the line, the whole remaining balance becomes due immediately. Now, as an absolute last resort, you can apply to HMRC for a discretionary grant on credit, which allows probate to be granted before the tax is paid. But be warned, this requires proving to HMRC that you've exhausted literally all other reasonable funding options first.
Finally, Section 6, Expert Help and Next Steps. Managing these timelines in government forms is incredibly demanding. But the good news is, you don't have to navigate it alone.
Let's tie everything together. Remember these core takeaways from today. Inheritance tax is generally due within 6 months of the end of the month of death. The direct payment scheme is your absolute best tool to break the probate deadlock, using Form IHT423 to pay HMRC directly from frozen accounts. But most importantly, securing professional guidance prevents these small, costly errors that result in thousands of pounds in accumulating interest.
I do need to quickly note that this explainer is for educational and informational purposes only. We're breaking down HMRC's source material to help you understand the landscape, but this doesn't constitute formal financial or legal advice tailored to your specific circumstances. Tax laws are incredibly complex and always subject to change, so getting a professional consultation is always the smartest move. Let me leave you with this provocative thought. Every single day of delay in estate administration is another pound of your family's hard-earned legacy just handed over to HMRC in late payment interest. Don't let pure bureaucracy shrink your family's inheritance. Take action now. If you need expert guidance to navigate probate and inheritance tax smoothly and efficiently, contact my tax accountant today. You can reach us by phone at 0208-570-8531. That's 0208-570-8531. You can email us at info@mytaxaccountant.co.uk or visit our website at www.mytaxaccountant.co.uk. And hey, if you found this explainer helpful, please subscribe to our YouTube channel for more essential tax insights. Thank you so much for joining us, and we really look forward to helping you secure your family's future.